Um, my name is Betul Kurtulus. I am the Regional Director of FCI, responsible for Central Eastern Europe, Southeastern Europe, and the Middle East.
Sorry,
for those
in
of
Polish
you,
it's very difficult to pronounce, so sorry for my pronunciation.
No problem. It was okay. Thank you. For those of you who doesn't know FCI, we are the representative body, the biggest association of receivable finance industry. We have 400 members in 90 countries. So today I'm pleased to present our statistics for last year and expectations for this year and the future. Today I want to focus a few key topics of the receivable finance industry. For banks, what are the benefits of factoring, and of course for the SMEs, why they need factoring. It was very interesting to listen to all the presentations, the digital developments, but let's come to the statistics. And please keep in mind when I'm presenting the statistics, the 90% of our members' clients are coming from SME sector. So here is the last year's statistic. The past year is one for the recourse. You can see the industry actually grown on a compound annual growth rate of 7% over the past 20 years, but this is down considerably from 9% compound annual growth rate due to the pandemic in 2020. The industry witnessed a drop of 6.5% for the last year. The first time that the industry faced with such a drop was in 2009 during the financial crisis, when the industry lost 3% of the volume, approximately at that time in 2009, 35 billion euro. The decrease in 2020 is 200 billion euro, so 5 times worse than the decade ago, and it represents the biggest drop since FCI prepares the yearly statistics nearly 40 years ago. So I want to show you a brief slide on how factoring compares the traditional LC and the global trade. It's seen here that the industry, the factoring industry since 2000, gained incredible speed. Today it is valued at approximately 3.3 trillion US dollar, where the LC industry increased also at a smaller rate, and it valued approximately 2.8 trillion US dollar. The upside potential is on the blue area on the top, which represents an open account merchandise trade over 18 trillion US dollar. You see from this receivable finance perspective, this is a green field. The another interesting observation from our side is the rise in non-recourse factoring. If you compare the figure from 2019, the share percentage increase from 42% to 55% in 2020. And again, it is the biggest increase ever reported. Here you see the figures in the different markets. The increase is huge from last year to this year in the biggest markets of Europe. For example, in Poland, Poland is was one of the rare markets that the factoring is not dropped considerably, but the increase for the first half of this year is 21%. Another biggest market is UK. The last year the drop was 17%. This year the increase is 17% also. So you see that in all markets, in the first half of this year. And also we have already statistics on the third half. The increase is very, very high. So you can see the productivity is also increasing in all sectors. Of course, this directly affects the productivity of the SMEs. You can see the huge increase since 2020, and we with the inflation is on rise, it will follow soon. It's just a matter of time. In all markets, we are witnessing the increase on the inflation. On the other hand, on the right hand side, you can see the chart on the vaccination distribution on the percentage of the population. The important part here is the emerging markets. You see, it's very, very small, the amount of the vaccination, and this is in parallel will adversely affect the factoring and the financing of the SMEs. But there are some significant recovery that we are witnessing in the first half of 2021. As you will see on the both of this data, the late payments increase and recovery is very good. From the beginning of pandemic, you see that it was 15 days and it increased in a very short period of time, 38 days. And also dilution risk. It's increased very sharply during the last year. This is basically the disputes, the merchandise issues, but in general, we never seen such an increase in the past dues in such a short period of time. Thanks to the government support program and the high vaccination in the beginning of pandemic, we see a sharp recovery on both of the data. It is now better than the pre-COVID period. The improvement is very, very impressive. And here is the client and the debtor risk outlook. Of course, in the factoring business, from the buyer and the seller side, we are controlling the both sides, and this is the statistics. This outcome is coming from the statistics from our members. You see the client outlook is on the seller side 66% and debtor side 59%, which is quite good for both of them. So here is the factoring market in CE region. Of course, Poland is one of our biggest region, and the increase of the factoring turnover is, except last year, is very, very good. And the other markets in the CE and SCE region is also very big. And the market share within the FCI membership, it's like in the turnover, it's like more than 50%. So here you see the benefits to banks and factors of the factoring as an instrument. The most important benefit is that the receivables are collateral. So it is very, very important for the SMEs that usually they do not have any other collateral than their own receivables. So it is the very useful product for SMEs and also for the banks that they can use the receivables as a collateral. And as we are financing the invoices, there is a direct monitoring opportunity for their business. Better knowledge on market, as we are financing the invoices, each and every invoice of the SMEs are producing. It's very easy to have the information of the market and the sector. Low capital utilization, which is directly effects of the pricing of the funding, and risk sharing with the third parties. It is very useful also for the banks, like the insurance companies and the correspondent factors. And it is at the end, the factoring is a very secure access to SME financing. And this is a statistic from a very big market of FCI, Turkey. As in factoring industry, there is always a higher demand from SMEs. And since years, the growth rate of factoring industry is bigger than the banking sector. You see here the comparison, the credit growth of banking sector and non-bank financial institution during the first half of last year and this year. So there is a huge difference. You see here on the left-hand side, banking sector credit increase is 20%. At the same time period, factoring sector increases 42%, almost doubled. And NPL also for the same time period. In the banking sector, it decreased 17%, and in factoring sector, the decrease is 40%. And return on equity, this is of course very important for the banks. In the banking sector, it decreased 7%. In factoring sector, it is only 4%. So it is the summary of factoring industry. I only want to show one statistic from this slide. It is the cost-income ratio. As you can see from 2020, here it is, the cost-income ratio, which is very, very important for the financial institutions. It is 39%. And last year, first half of this year, it decreased to 38.1%. This is only because of the digitalization of the industry, and it decreased of course the cost of the equity, and also speed up the payment time of the funding. So where we are healing, factoring in the recessionary times, what we are seeing in the recessions, we experience for the lifetime of FCI and the factoring, we experience a Great Depression and the Great Recession, the banking recession in 2008-2009. The statistics shows that the factoring performed very good in the crisis times. And in the last crisis in 2008-2009 period, factoring increased 2 times in 2 years' time, and 3 times in the 3 years after the 3 years of the financial institution. So the performance of the factoring already proven for this kind of crisis. So the crisis is opportunity for factoring industry as the economies begin to rebound. There's a need for liquidity for all kind of clients, especially for the SMEs, and the risk mitigation will increase. So we are already seeing a surge in demand in new business opportunities, but of course we have to be very careful about the potential frauds. Here is the statistic for the not a statistic, the expectation of the receivable finance market. Global estimated receivable finance market represents today $5 trillion, which accounts to 6% of the global GDP. And by 2030, receivable finance market estimated to exceed the $10 trillion. The estimation based on the 6% of a compound annual growth rate for over the next decade. And this will be account for the nearly 10% of the global GDP. So the expectation of increase of the global receivable finance market is huge. But of course, with the investments on the digitalization, this picture may change considerably. So this is the end of my presentation. I will be happy to answer if you have any question. Thank you.